Our next guest says that the Oz dollar is probably the most highly correlated currency with equity markets. So with the sell-off today, what does that mean for the Oz dollar, and what does the latest GDP numbers mean? Well, we have Richard Yetsenga, HSBC's Asia Forex strategist, joining us on the program. A good Wednesday to you. Richard,
Hi.
How are you?
Good.
All right, let's talk about those GDP numbers from Australia coming in way higher than forecast. What are your views on what we saw?
I mean, I think what it highlights, of course, is the resilience of the Australian economy, and after being on again, off again, rate hike expectations will be on again now. And if the next two retail sales numbers are strong, then I think the market will be looking for a rate hike in a month. I mean, the backdrop here is important, though. This is September, and in September we know lots of strange things happen, and the last 24 hours is a good case in point. So, I'd be a little cautious about the currency in the very short term, but certainly the medium-term picture looks extremely positive.
Why would you be cautious, though? And what are you looking out for specifically? What sort of data points are you looking for to maybe, have the skeptical view?
Well, I don't think it's a data point problem. I mean, you highlighted in your intro that the Aussie's been quite highly correlated with equity markets. There's been, if you like, this unnatural correlation across asset classes the last few months. And because it's unnatural, it's not going to persist. Working out when it's going to end is the tricky part.
You're saying equity markets are not natural?
Equity markets, commodities, currencies, credit spreads, all moving in the same direction, tick for tick, is not natural.
Yeah, pretty hard to gauge. Okay, well, let me just ask you, are you joining in on the bandwagon then that interest rates will certainly rise in Australia in October?
No, I don't think they're going to rise in October. We still think that they're not going to rise until next year.
Wow, that's a contradiction. More than 60% of economists say that they probably will move in October.
Well, I mean, I don't think the statement, I think, that was out yesterday has enough caution in it to suggest that the bank needs some more evidence before it's going to move. But I think the key thing is, if it looks like the economy is holding up as some of the fiscal stimulus wanes, then the case for tightening is much, much stronger.
And what about the Oz dollar today? As you said, in the short term, it's really pretty hard to predict. We're seeing a huge spike after those unexpected GDP numbers. What does it say to you, these sort of movements in the Oz dollar?
It says to me that we're in September, and we will see a lot of volatility this month. I mean, I think for most investors, a lot of markets have had pretty bullish, almost linear runs the last few months. We're at the very tail end of the holiday season in the Northern Hemisphere, and so I think intraday volatility at the very least is going to be very high.
Yeah, but I guess overall, at the end of this year, you're looking for the Oz dollar to strengthen about 86 cents to the U.S., 95
next year.
By the end of next year.
I mean, it's actually a pretty simple view. It's a view which says typically to think about the global influences on the Aussie, we've looked at the US, and the US economy, of course, the recovery there still looks quite weak, particularly on the consumer side. And that, I think, has led to a lot of caution when people are thinking about the Aussie dollar. But, of course, the global influence in an environment has changed, and China this year clearly has become a much bigger driving force on the global economy.
Commodities you mentioned as well?
Absolutely.
Yeah.
And our view on China is very bullish from a growth perspective. And policy is set in China to deliver a very strong recovery. Our economists, for instance, are looking for 10% year-over-year GDP by the end of this year. Now, part of that will be base effects, but it will certainly look very nice. And I think that's the sort of thing which says even against a US economy, which looks still quite subpar, the Aussie can have even a pretty good cyclical recovery from where we are.
Well, let me just ask you, I guess on a broader perspective, across the Asia Pac, which currency looks interesting to you at this point for the end of the year?
I mean, Korea, I think, has been a favourite of the market this year because it's presented positive fundamentals on so many fronts. But besides that, the market I would be watching is India, and unfortunately not for particularly favourable reasons. I think, domestically in India, there's a lot of things starting to add up to, I guess, what I would call a pretty difficult domestic environment.
What in particular are we looking at? The budget deficit?
Well, I mean, the budget, of course, again, in isolation, a lot of these issues are not a big deal. I mean, we've known the budget was in reasonably poor shape. Nothing there has changed. For the past few months, the drought's been creeping up, which has caused, obviously, worsens the trade-off between growth and inflation. The trade account has started to deteriorate again as oil prices have come up.
That's correct.
Bond yields are creeping higher as there just is insufficient demand to cope with the issuance program. Foreigners have put a lot of capital back into the equity market after the drawdown of last year. So you look at all of these things together, it's starting to get very difficult, I think, domestically for India, for markets to adjust to high inflation, low rates, rising bond yields, banks being less willing to buy government bonds, large budget deficit. I think the rupee really is, if there's a risk in Asia for a significant currency depreciation, it's in India.
Wow, that sounds pretty dire. Your calls for the rupee, has it changed? We were looking at 54 by year-end.
No, we still have 54. I mean, probably a month ago I was feeling that was too high. Right now it's probably the right sort of number, but certainly directionally I think the dollar stronger in India, I think, is still a very clear trend.
Okay, so with that sort of depreciation on the table, what sort of cross-play can you, with the Indian rupee, can you make money off of?
I don't know that I'd do a cross-play. I don't know that I'd complicate it by doing it like that. I mean, even, and in fact, interest rates in India, particularly in the offshore market, are so low that the negative carry associated with buying dollars is not that bad. So I'd keep it very simple.
Just keep it very simple.
Keep it vanilla.
Okay, well, let's talk about the yuan. You mentioned the yuan. That was something interesting to you until, I guess, the rupee took your attention off. But what do you think about the yuan? It has retraced a lot of its gains for the year.
I mean, to some extent, I suppose, but it's still the currency which, and if you think we're in a global recovery, it's the currency which presents the best on a positioning perspective. Certainly, foreign selling of Korean equities during the crisis was the largest we saw for any market. And as best as we can tell, only a portion of that money's come back in. It's the central bank, besides the RBA, well, if you discount the Bank of Israel, which has gone already, most likely to move rates, relatively soon. And the currency is still, relatively cheap on kind of long-term PPP type valuation measures. So it still looks pretty good. Okay,
well, let's keep on the yuan, but we have to go to commercial break for now. Let's talk about some cross plays on that specific currency. Let's get back to our Forex discussion with HSBC's Asia Forex strategist, Richard Yitsenga, rejoins us. And Richard, before we went to commercial break, we were talking about the yuan, and you're expecting some more strength in this currency. I guess the current account and the economy looking encouraging. You're looking for 1,200 levels for year-end?
Yes. I mean, we've had that forecast pretty much all year. I mean, maybe at the moment it looks a tiny bit higher. I suspect the Bank of Korea's intervention policy will have something to do with whether it's too high or too low, but certainly directionally, still comfortable with the direction.
Okay, so you didn't recommend any cross plays. You wanted to keep it simple with the Indian rupee. What about with the yuan? Can you get a little more complicated?
We've tried being a little funky this year with Korea and buying Korea against Japan, and it worked for a while. In the last 3 months, it's been a bit of a graveyard, unfortunately. The yen has not been as weak as we thought, and certainly after the election it's been strengthening, and the wobbles in global markets will probably see that persist in the very near term. As we go forwards, though, I mean, our anticipation is that the yen, will resume its weakening trend. Certainly from a domestic perspective, Japan still presents what seem to be about the poorest fundamentals of any major market anyway.
I think I just heard you say that. Hopefully the new TBJ government didn't. But let's talk about the yen. Risk aversion is back on the table. As you said, you have some pretty weak expectations for this currency. 105 by year end. And it doesn't look very likely right now, does it?
No, it doesn't look likely. I mean, I think next year it'll end up being a reasonable target. Right now, though, a little bit of enthusiasm about the new government. As you say, a little bit of global risk aversion, some recovery in the Japanese current account surplus, all enough to keep dollar yen under a little bit of downward pressure.
Okay, well, how about next year then? What's a good cross play with the yen? Are you going to keep it simple with euro, dollar?
Well, you could do euro. Aussie probably is the obvious one in this region, and also kind of in the non-Japan Asian space. I think crossing it up against Korea still makes sense. Certainly, that cross was driven to extreme levels earlier this year as Korea's external balance sheet weighed on the currency. And that obviously has become a non-issue as markets have recovered.
Can you give me some levels for the Aussie-yen trade? I mean, what sort of expectations are you looking for in this in that cross? Like, how much can you gain?
Well, I mean, next year I think you could make a lot, because I suspect you're going to have some good entry levels. Part of the problem with September, as we've been discussing, I think, is markets have been supported by this Fed on hold. The US economy being strong enough to support global asset prices, but not so strong that it develops some Fed tightening expectations. And at some point, that fine balance has to be tested, I think. And we're starting to see numbers in the US which suggest that be in the near term. So you could see a big correction in Aussie yen, as you've seen already, but I think you could get 10 to 15% out of that cross next year. Well, I mean, that fits. In fact, with our Aussie forecast, you can get 10% or even a little bit more just based on Aussie US. So if you get some yen weakness, that just gives you a bit of extra kicker for that cross.
All right, Richard, thank you for dropping by. Nice
Thank
seeing
you.
you once again. Richard Yatsenga, HSBC's Forex strategist.